Well, first of all, I think people running their own money have to be cognizant of the diversification they've actually got in their portfolio. So my first comment would be banks have had a good run, telcos have had a good run, healthcare stocks have had a good run, resources haven't. So you probably want to revisit that and just work out where your exposures are. The other thing is hybrid issuances have been very popular, very well sold. You've got a motivated sales force out there getting 1% commission every time they sell a hybrid. So quite often investors will end up with a significant number of hybrids in their portfolio. Quite often they're bank hybrids. So they've got a double exposure there through the equity and the hybrids. Just be cognizant of that. Well, for starters, I think I don't know, and I hate to sort of generalise and try and sound like I know what the market's thinking, because I don't. But I just think that the market is gravitating towards these really big names in the market, and as we discussed before, the defensive earning streams and the yield, and they are forgetting about some of these other opportunities that are showing reasonably high growth. They're trading at relatively low low multiples versus the market. So to give you an example, FlexiGroup on about 10 times, they're still yielding about 5.6% fully franked, so that's similar to the banks. They've got more growth, although perceived riskier growth because it's a smaller company. I don't necessarily agree with that. And the other area that you could potentially get growth is just in the dividend aspect of it. So the lower multiple you pay for a company, the higher the cash earnings of that company will be as a function of the share price. So although FlexiGroup yield around about the same as the banks, their payout ratio is far less. So they could see earnings come back a lot more than the banks without the dividend being under pressure. Alternatively, they could lift their payout ratio, and if it was comparable to the banks, FlexiGroup would be yielding 8.5–9%, which grosses up to well above that when you include franking credits.